Today, stocks dive in $50 billion falls. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. And this is just a quick update on today's carnage in the markets. It's pretty shocking and follows what happened in the US overnight. In fact, the US market fell last night with tech stocks being hit very hard, and the negative sentiment haunted our markets today. The Nasdaq fell 4.43% to 7,108, and it's now moved down more than 10% of its highs, so officially it's a correction. The fear index, or the VIX, was up again at 25.23, signalling more concerns and more volatility in the marketplace. The Dow Jones fell 2.41% to 24,583, and actually most of the news was old news, with the expectations of a higher US interest rate thanks to the Fed and continued fallout from the trade wars, but the sentiment was strongly negative again. So no surprise then that the local markets here were also hit hard in choppy trading today. The banks felt the pain. For example, Bendigo and Adelaide Bank fell 2.57% to 9.85. Suncorp dropped 1.95% to 13.61, and the Bank of Queensland dropped a massive 5.32% to 9.43. And falls were seen right across the sector, with the CBA down 1.97% to 65.54, National Australia Bank down 2.21% to 24.61, the ANZ down 2.24% to 24.88, and Westpac down 2.06% to 25.96. Macquarie, with its international exposures, fell 2.84% to 110.46. And the ASX Financial Index fell 3.02% to 5,534. The Aussie ended at 70.74 against the US dollar, which is at the low end of its range, and the ASX 100 ended down 2.82% at 4,661. The local fear index was up again to record highs, sitting up 27.26% to 22,280. But AMP was hit hard, thanks to their announcement today of further divestments. Timing, of course, is everything. They announced the successful completion of its portfolio review, including an agreement to divest its Australian and New Zealand wealth protection and mature businesses, AMP Life, and reinsure New Zealand retail wealth protection for the total proceeds of 2.43 billion Aussie dollars. But of course, the question with AMP is, what is its strategy, what is it going to be, and how is it going to drive the cultural change that it requires to recover its brand and reputation? It's a tricky journey for them ahead. So in summary then, a lot of negativity here in the markets today. And of course, the question now will be whether this will continue overnight in the US or whether there will be a bounce back. My own view is that there will be continued volatility over the next couple of months, and we won't necessarily see a steady fall into more negative territory, but the general drift will continue lower. And of course, the backcloth of interest rates and trade wars have not gone away. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.